Most of you have had some experience in real estate in some form or another. What are the three things that determine the value of a cash flow property? Somebody.
Anyone?
What is it? Three things.
Location.
Wrong. Cash flow, and cash flow. Period. All you're buying is a future stream of income. And that future stream of income is based on the current rents, the current credits, and the ability to refill that space if and when you ever lose a tenant. That's why you buy those buildings. Now, there's a whole bunch of stuff that goes behind that. I'm not suggesting it's that simple. But it's all about cash flow, nothing else. Location is a factor to get to cash flow. It's only one of the factors. Let's just give you some real quick, let's give you some real estate terminology so we're all on the same page. Net operating income, NOI, very simply, is the net pre-tax income the property generates after all the operating expenses and before debt service or return to the investor. In other words, it's what the building makes itself without any debt, without any return to the investor. Very important. A lot of agents like to throw out there all kinds of cap rates, current cap rates, pro forma cap rates. It's very, very important that you use a very rigorous, standardized comparison from property to property. The cap rate is very simply is the net operating income divided by the purchase price. Property's throwing off 100 grand. You buy the building for $1 million, it's a 10 cap. You buy the building for 1.1 million, it's about an 8.9 cap. Most important, we're comparing to other types of investments. Think of cap rate as your dividend yield. What's a good dividend? Who's in the stock market? What's a good dividend yield in the stock market today? 2%? 2.5%? Anybody aware of anything much better than that? I don't think so. We're talking real estate. We're talking 8s and 9s and 10s. And then, of course, there's capital gain or loss, just like a stock. You buy a stock at 40, it goes to 30. You've got a 25% capital loss. You buy a stock at 30, it goes to 40. You got a 33% capital gain. Same thing. The real estate theoretically can go up and down, and it will with the economic cycle. So all you have to do is know where you are in the cycle, and you'll be fine. And it's very simple. It's the difference between the purchase price or the theoretical price and the current fair market value. So let's talk about selecting commercial real estate. Dolph DeRoos talks about the 100-10-3-1 rule. Pretty simple. You analyze 100 properties. You make offers on 10. You get acceptances on 3. You buy 1. My experience doing this deal in Gainesville, that's pretty much what the numbers look like. Very simple. You got to kiss a lot of frogs to find the prince. It's true. There's a lot of dogs out there. Now ask me the next question. If you were going on a safari to Africa, what would you do? Would you just run off on your own? Or would you buy a map? Would you read a book? Or would you hire a guide? Well, you know, one wise person once said, if you don't know where you're going, you might end up there. Well, we're going to suggest to you that Sabre Realty Group is your guide. We're a full-service commercial real estate brokerage firm serving Fairfield County and the surrounding areas. We specialize in purchase, sale, lease, brokerage of commercial properties for individuals and companies. And we provide office, industrial, retail, and investment solutions for our clients. Pretty much met everybody before. Ron Zminiak is our leader over here. Ron's our broker and a licensed appraiser. Paul's our CEO and technological guru. Don is not here. Don is also a sales associate and a licensed appraiser. Debbie is our sales coordinator, licensed agent also, and Alan and myself. Great philosopher Yogi Berra once said, you get to the fork in the road, you got to take it, right? So, we've got a couple ways we can go tonight, folks. You can go out and buy your own property. Plenty of good reasons to do it. Many in the room have done it. First and foremost, you have to have sufficient capital to invest. You have to have the time and energy to manage it, or at least hire and supervise professional managers. You need to have a working knowledge of financing, leases, leasing agents, and property management. And you may be geographically limited. Alternatively, we offer Sabre Equity Partners. Small investment amount, $100,000 per share. Pay a regular cash dividend, monthly, distribution, monthly, unleveraged. We're going to buy a property all cash, so that from a risk point of view, where we've reduced the risk to the lowest possible level from a financial theory point of view. It will be tax advantaged. The depreciation will be distributed to the shareholders. And it's an opportunity for those of you that may want to do more in the future. It's kind of like training wheels. You get to receive the value of our collective wisdom and experience, minimal time investment, and you can relax, you can learn, and you can earn. This is a bold new initiative. It's not been done many places. And our goal is to enable a segment of investor clients to enjoy the benefits of commercial real estate ownership while minimizing the obstacles and risks. The current economic climate has created the greatest commercial real estate opportunity in our lifetime. I mean, real estate's on sale. Don, if your wife goes to the shopping mall and she sees a sign, sweaters, 50% off in some first-class store, is she probably making a turn in that store? Okay. You darn tootin' she is. My wife would be too. And real estate's on sale, folks. It really is. And if you don't believe it and you don't do this or something else like it, you're going to miss the boat. You really are. In 5 years now, you're going to be going, recession of 2009? What recession? There, of course, is barriers and pitfalls to be avoided. And that's where you need the knowledge and experience of professionals like us to help you. We will leverage the cumulative professional experience, skills, and knowledge within our organization. You saw before our resumes briefly. We've got a very broad background here. And we're not just salespeople. We've done this for our own money. These offerings will be designed to provide smaller, passive investors the ability to pool together their funds and take advantage of commercial real estate opportunities. These offerings are also designed to be suitable for IRA and 401k type investments. We talked before, long-term financial goals, financial planning, financial future. Saber Equity Partners can easily accommodate retirement type funds. Our initial approach is pretty simple. We're going to pull together investors, $100,000 share, we'll consider taking half shares. We'll buy high quality, well-tenanted office buildings or shopping centers. Multiple tenants equals risk diversification. We're looking for strong credits. We're going to target properties in the range of $3 million and higher. We'll consider smaller deals if they're particularly strong and attractive. Purchase properties with a cap rate in excess of 8%. No place else that I think you're going to go now and buy a stock on the New York Stock Exchange or even the NASDAQ that's going to pay an 8% dividend or anything, even half that. We're going to acquire the properties all cash to minimize the risk. And then we're going to convert that cap rate, that 8%, into a monthly distribution tax advantaged. And then we'll be looking for the timely return of our investors' capital while retaining equity. We'll use Saber brokers for the acquisition and property management and leasing. We'll provide a distinct possibility here. I kind of see two possibilities. If we get lucky and we hit a property in the area that the next 3 to 5 years just skyrockets, we'll probably circle the wagons with our investors and we'll probably sell the property. Create the opportunity to do a 1031 and do it again. More likely, we'll just get a good solid property that'll be well managed with good credits and we'll just crank along. And 5, 6, 7 years from now, that property's worth a lot more than we paid for it. We go to the bank, we take a 50, 60% loan to value mortgage on the property. We can then pay our investors back every penny they've put into the deal, and yet they'll still own their portion of the property. You got the money back, you can do something else with it, and you own your hunk of a building.
Tax consequence if any of you do that?
If it's a cash out tax distribution, there are no tax consequences.
Okay, that's what I wanted to hear you say.
Yes, sir. If we sell it, there are. And if we were to sell it, we would be looking to create 2 escape routes, a 1031 route and a non-1031 route, so that the investor could make that selection for themselves.
What's the legal setup? Because I would assume that if...
Good question. If you can just bear with me for 1 sec. Great question. We're going there. Very simply, once you all have received 110% of your money back, we get 30% of the building. And it'll be a secure hedge against inflation, and we'll look to sell the property somewhere in the 5 to 15 year time frame. As far as structure, each property will be purchased in a single purpose limited liability partnership. The property will be purchased will be identified in advance. Everybody's going to have a chance to sign off on a particular property. We're not looking for any blind money, full disclosure, complete transparency on everything. We'll offer the property through a private placement memorandum. We will be dealing with properties small enough and with financial security regulations at a low enough level that will be exempt from all the Regulation D exemptions of the SEC. That just means a whole lot less hassle for all of us, and it means a whole lot less cost for the project, unlike, say, a REIT. We will form Saber Equity Management as a Connecticut corporation. Saber Equity Management will take a 1% position in the property, and they will serve as the managing partner. And we'll do business as much as possible with Saber affiliated entities to keep the costs down and maximize control.